What is going on YouTube? We are back with another one. Alright guys, there's a ton of moving parts out there in the markets right now. So in this one, I want to run through a few moves, but also give you guys a bit of an insight into how I am approaching the markets. What am I doing? Am I dip buying? Am I doing anything else that might be different to that? So before I get to it, all I ask is that you guys hit that like button for me. Now before I dive into it, I want to share this with you guys because this is an option play that I put the team over at the Discord on Monday. Now it was entered, it's only Wednesday, this is up over 40%. So where it might seem like the whole of the market's under pressure right now with mega cap tech dropping, EV plays dropping, semiconductor plays under pressure, I'm telling you guys there's always going to be opportunities to make money in these markets. That being said, if you haven't already, make sure you hit that top link in the description to tap into our Discord so you get up on the plays and the moves that we make. I look forward to seeing you guys over there. Alright, so before we get into these moves, I want to touch on the market, being the major indices like the SP 500, like the Nasdaq. That's important that you guys know what's going on with those because their movement is going to govern what 95% of the entire stock market does. So if you're out there in the markets aimlessly dip buying like a Hoover, that's the wrong approach because if those major indices come down, those plays that you just entered will also come down. Now, there's major headwinds hovering over these markets right now. One being the treasury yields. As they're rising, it's upsetting the market. Another is the major supply chain issues that is being felt across the board to any of these companies that import and sell products. Now, what's going to happen is they're going to come out with good numbers in their next quarter, but there are going to be cautionary notes issued because of the continual disruption and the no near-term end in sight from them. Okay, next up is inflation. We know that is not transitory. All these things are building the markets. Now check this out. This is the SPY. This is an ETF that tracks the SP 500. Now I told you guys we had a major breaker trend not too long ago, but lo and behold, very soon after that we bounced up again. Now that's no surprise because there's still high levels of cash right now and there's continued enthusiasm for stocks. But check out what happened shortly after that. We broke that trend again and now we are testing that 100-day EMA. So what this is telling us is right now there is a tug of war between the buyers and the sellers, right? And now things are skewed in the sellers' favor because of all the headwinds that are hovering over these markets. That's why I say if you're out there in the markets aimlessly dip buying anything ABC, as if the stock market was back in August when we had market euphoria, everything was falling into place, that's the wrong approach, right? It's about being tactical, it's about being strategic right now. So that's why I want to run through a couple of moves and just give you guys an insight into how you could play these markets from a different angle. So I want to kick things off by talking about going against the grain as a way to profit when prices come down in the markets. Now what we're seeing is a lot of stocks coming down 5%, 10%, 15% even in cases. Now just because cheaper prices are open up doesn't mean you need to go piling in because across the board typically in these markets still overvalued. Okay, so if the market wants to be turbulent, that means it still leaves a lot of room for stocks to come down, and that includes your favorite plays. Like I told you, stocks like DraftKings, Palantir would come down. That's exactly what happened. That's why I want to highlight this one for you. Okay, this is a triple leverage short position on Facebook. Now I could have chosen many others out there, but I've chosen this one. Okay, ticker symbol 3SFB. So if the underlying Facebook stock is going to come down 2%, typically this will move 3 times in the reverse direction, so move up about 6%. Now, we know across the board, mega cap is under heat, it's under pressure, and there could be further downwards movement. Now, let's make no mistake, I want to make it clear that I like the Facebook company, I like the stock. I've even got my long-term position that I'm just holding, just letting work in the background. I'm not touching that. This is a company that is growing, is scaling, they've got a great handle over the social tech scene. Also, they're expanding into different verticals like the metaverse, which could do phenomenal things for the company and the stock. But we have to pay appreciation to the current situation and its near-term headwinds that are having an impact on that stock price. Okay, there are investigations in the business right now, but also they've issued a pre-earnings warning, which they never really do because of some changes that Apple have made, and they're saying it's impacting their current quarter. Now, given the lower sentiment in the market, these companies have to post up amazing results, phenomenal guidance for the market to appreciate them on this earnings season that we are currently going through. That being said, the Facebook stock price has dropped down about 10% from its highs, and typically in the past we've seen corrective moves, pullbacks nearing the nature of about 15 to 20% on the stock price. Okay, now they've recently just annihilated that 100-day moving average, so right now the stock is kind of sitting in no man's land. The next stop down is that 200-day moving average, around that 330 mark for the Facebook stock. Now, that being said, if they were to come down, the triple leverage position would be up massively off the fact that it moves in the opposite direction. Okay, but as I say, Facebook stock is phenomenal, but a lot of these companies are going through near-term headwinds. Same thing goes for Apple as well right now. That one could hit that longer term support around that $335 mark, which would be about a 5% pullback from its current stock price. All these things are very probable given the current market environment that we are in. So I just want to let you guys know that. Next up, we've got Alcoa, ticker symbol AA. The reason why I'm bringing this one to attention is because right now, this play is pretty much one step removed from the market. That is, it's not trailing what the market is doing. We know tons of stocks out there getting slammed right now as there's pressure on the markets, but this one is pretty much doing its own thing. This is one that I've identified with the team over the Discord way back as one of our focus plays. So we've been buying this one aggressively over the last couple of months, and check this. Over the week, this one's up 5%. On the last month, it's about 15%. On the last 3 months, it's up about 34%. That just puts things into context, because if you compare it to most other stocks out there or what the major indices have done over the same time frames, the picture looks very different. Now, the reason why this one's hitting such high levels of success, that is because the fundamentals and what's going on beneath the surface is phenomenal. Okay, they are being driven by the strength in aluminium prices, and given all the production curbs and the power outages that we are seeing in China affecting the supply, and we still got high levels of demand, is giving momentum to the aluminium price. That means that Alcoa, being one of the best in breed aluminium producers in the US, is continuing to bank high levels of profit off the back of that. And I don't think the run stops there. I think we've got further upside in the play. And that is the message for you guys. When you're out there in the markets, you want to ensure you are picking up quality plays that are set to completely destroy their earnings this quarter, next quarter, the quarter after that. So you really do want to ensure you're picking up the best in breed quality plays out there in the market that are set to succeed. That's going to put you in the best possible position to generate higher returns in these markets, and Alcoa is just one that ticks the boxes. Alright guys, so we're bringing it back for this one. If you've been rocking with the channel, you know what time it is. Is there a sector rotation happening? As you mentioned here, Facebook, Microsoft, Apple are down, but also Nike, Adobe, PayPal seem to be downtrending, all companies that generate a lot of cash. Now, I wouldn't call this a rotation out of these industries and out of these stocks. I would describe it as selling in anticipation of cheaper prices opening up. Now, we know the market is on the back foot right now, but there's still going to be tons of cash and enthusiasm for stocks. That's why it's difficult for the stock market to crash. We get these small pullbacks, then these bounces, these recovery phases, but we don't get the crash in the markets that many are looking for. So you have a lot of market participants taking the money out in anticipation of that crash so they can get in at cheaper price points. Now, all these companies you have mentioned, because the valuation is high, it leaves more room for them to come down easily if the market is going to be turbulent. But when you guys know, they remain great long-term plays in your portfolio. And if we're having this discussion 12 months, 24 months down the line, you should be easily, comfortably in the profit if you get in at the right price point during this time. Now, I wouldn't go and dive into any of these plays right now. I'd wait for them to become technical buys before making entry, and I'll let you guys know from my perspective when I think these plays are ready to go, okay, when they hit key lines of support. Now, as we go over the next couple of weeks in these markets, there's still going to be opportunities, areas, pockets in the markets to hit short-term victories, but they're going to come from spaces that are more cyclical in nature, like the commodities. And I mentioned two plays for you in this drop, one being ticker symbol AA, Alcoa, and one I mentioned at the beginning, ticker symbol ARCH, the coal producer. This is because the underlying drivers of their strong stock price performance is in phenomenal shape moving forward, and it can further strengthen given the dynamics in their respective industries. Alright guys, that wraps things up. If you've got any questions for me, drop them down below and I'll get back to you. On your way out, make sure you guys like that comment section for me. If you're new, join the movement by hitting that subscribe, and I'll catch you guys in the next one.